Welcome traders to another episode of our free Forex training. I know you've been waiting for our next video. Thank God that video is here. In today's video, we're going to talk about 3 basic words or terminologies in the Forex market. And these terms might look basic for beginners, but I want to say that even if you are a pro, or if you're already a trader in the Forex market, this information I'm about to share with you, you will come to understand that it is not just for the beginners, but it's also for the already existing traders, whom I normally refer to as the pro. So today's video, I will entreat you to watch it to the end, and I'm sure you will add up something new to your knowledge base. So please, this video is going to cover 3 words, just like I said earlier. And these 3 words I'm talking about are the bid, the ask, and spread. So we have the bid price, the ask price, and then spread. Today, we're going to look at these words in detail and then in practical form, what they mean. So they are not just words. Maybe you know their meaning already, but maybe when we go to the practical aspect, you will come to understand that there was something maybe you didn't know, or there is going to be extra information that you will have lost if you had not watched this video to the end. So without wasting my time, let's roll. But before that, you already know how to get in touch with me at Kofi Dollar on Telegram, by email leadingforecgh@gmail.com, via phone or WhatsApp, that is +233-246-136609. You can get in touch, and if there is something new you want to ask, you can always ask me. So Leading Forex, we want to be a community that you can trust, a community that can solve your problems in terms of online money making, whatever you are stuck in, be it Forex trading, stock trading, crypto trading, indices, metals, oil, in terms of all the ways or the avenues to make money online. Specifically in Forex and other ventures, we want to help you out in case you are stuck somewhere. That is what we stand for. And so we want you to be part of this community by subscribing to our channel and also hitting the notification bell so that anytime we drop a new video, you'll be the first to grab it. So let's go to our topic for today. Now, listen and listen carefully. All Forex codes, we are beginning with the notes. So quickly, let's run through the notes before we go to the practical session, which is on the MT4. So all Forex codes are quoted in 2 prices, the bid and then the ask. So the bid price is lower than the ask price. We'll come to understand this quickly. Now, the bid price is the price at which your broker will allow you to sell any currency pair. Take note, the bid price is the price at which your broker will allow you to sell any currency pair. If you want to sell, if for instance, Euro USD, the price at which your broker will allow you to sell Euro USD is what is called the bid price. And then we have the ask price. The price at which your broker will allow you to buy any currency pair is also called the ask price. These are 2 clear opposite words. The sell price at which you will be given by your broker is called the bid price. And then the buy price that you'll be given by your broker to buy any currency pair is called the ask price. Now, the difference between the bid price and the ask price is called the spread. And the spread simply means commission. It is a commission that your broker takes from you for allowing you to place a trade through their platform or through them. So your broker will charge you for that commission. There are other brokers that do not charge that commission through spread. We'll talk about them at the later part of the video. But for now, the spread is actually a commission that your broker will add to your quotes. The sell price and the buy price, they will add that price to the quotes. And when you buy or sell, that commission goes to them. They take that spread, which is the difference between the ask price and then the bid price. They take that as commission. We'll soon get to understand that in practical. But let me take you quickly to this slide before we go to the MT4. Now, look at this picture or screenshot. It's a clear demonstration of what the bid price and then the ask price is all about. So we are saying that the bid price is the price that your broker will allow you to sell. So this is the bid price. It's always the first one in terms of the price code, this one. So this price is 1.34568. So that is the price your broker will allow you to sell, for instance, €USD. And then when you look at this price here, it is 1.34588. So this is the price at which your broker will allow you to buy. So that's why you see buy here and you see sell over here. So when you are buying, this is the price your broker will give to you. If you are selling, this is the price they will allow you to sell. So the difference between these two price codes is different 2 pips. So the 2 pips difference, which is between these two codes here, is what we call the spread. So the spread is 2, which is going to be a commission that your broker is taking from you for allowing you to place a trade. You'll come to understand that in detail. But for now, let's just run through the notes quickly. Now, at this level, I want us to go to the MT4 and then we do, okay, maybe let me add the last slide, this one, before we go to the MT4. So when you look at this, we have €USD, and you already know the base currency and the quote currency or the counter currency. So the quote currency is also known as the counter currency. So base currency is the euro, the counter currency or the quote currency is the USD. If you don't understand that, maybe you have to watch the part 32 video that I've made. You understand base currency and quote currencies, right? So the bid price is the first quote, the ask price is the second quote. So when you subtract these 2 quotes, you get 2 pips. So the 2 pips here is the spread. So subtract the ask price from the bid price, or sorry, subtract the bid price here from the ask price, and you get 2 pips, and that is the spread. Is that okay? Good. Now, at this level, let me take you straight to the MT4 and demonstrate all that I'm trying to show you today. This is where you need to pay attention because this level is very, very important to me. Now, this is the quote. We were using €USD for demonstration. So let me bring €USD. So this is €USD. I have actually taken the time frame to 5 minutes, I think, 5-minute time frame, because I want you to see certain things I want to demonstrate to you clearly. All right. Now, you will see 2 prices over here. If you look on your chart, you see 2 prices. The first price is always here, and then the second price column is also here on each currency pair. So the first price that you see is the bid price, and that is the price that your broker will allow you to sell. And then we have the asking price, the price at which your broker will allow you to buy any of the currency pairs. So we have these 2 quotes over here. Good. Now, today is Saturday, so the market is closed. And so the price are stable. They are not moving. But if it is a live market, you see the price changing. The quote will be changing. You see them changing. Because when the market is moving, the price will also be moving. Now, in case you don't want to focus here, there is also another way to get the price quote or the price, which is the ask price and the bid price. Now, when you come to the corner here, at the right-hand corner, sorry, the left-hand corner here, there's a small white arrow. There's a small white arrow over there. When you click on it, I mean, when you come to this here, Those of you watching closely, you see here at the corner there, there's a small button over there. When you click on that button, you see the price will also appear. So you see the price code here. All right. You see the price code here. So if you want to buy, you see buy here. This is the price at which you'll be given to buy. If you want to sell, this is the price you'll be given to sell. So when you look at the MT4 right now, Euro USD, the price is 1.13166. That is the selling price that they are giving to you. And the buying price is 1.13176. So you see that the difference is about 1 pip between this pair. Euro USD is about, the difference is 1 pip. So the 1 pip difference here is the spread that your broker is charging you. Good. Now, again, you will see a line, an ash line that moves with the price. When the market is moving, you will see a line, an ash line that is always moving with the price. When the price is moving, you see that line. Currently, the market is closed, so you can see the line here. The line is very stable. The line is not moving. So this line over here that you are seeing here in the middle here, that line is what I'm talking about. That is the line here. It's a straight line down there. Now, that ash line you are seeing there is what we call the bid line. It's the bid price line. The bid price line. If you look at this line, the price is 1.13166, which is here. The same as what is here. 1.13666. 1.13166 is the same thing here. So that is the bid line. There is also an ask line, but oftentimes we don't see it unless you go to bring it or you activate it. You may not see it on the chart. So in this lesson, I want us to activate the ask price line because this is the bid price line, which is the ash one. I want us to bring the other line, which is the ask price line. So to bring the ask price line, you may have to right click on the chart. Then you go to properties, which is the last part of the menu, properties. You click on the properties. You will see the ask line here. You see it here. We have colors and then column at the top here. Left corner here, we have two menus, colors and then column. At the colors column, you see ask price, second to last. The color for the ask line, it's on red. So let me leave it on red, but in case you want to change the color, you can click to change the color to whatever color you want. But I want to leave it on red because those watching the video, I want you to be able to see the line clearly. So once you see the line here, ask line in red, then you go to the common menu here. So when you click on common, you see that the show ask line. There's a box at the back here, show ask line. So you tick the box. So once you tick the box like this, then you can click OK, and that line should appear on the chart. So let me click OK. And as you can see, the ask line has also appeared on the chart. So currently, we have the bid price line, which is the one at the down. And then we have the ask price line, which is the one at the top. Now, this is where things are getting interesting. So pay attention. Now, anytime you want to buy, they are saying that when you want to buy, they will allow you, your broker will allow you to buy at the ask price, which is the red line at the top here. The top line is the price at which your broker will give to you to buy. So for instance, if the market is moving and I want to buy Euro USD right now, this is the level that I'll be giving to buy Euro USD. So once I buy Euro USD, this will be my entry point. This will be my entry line. So if you want to buy any currency, the ask price will become your entry level. The ask price is going to be your entry level and not the bid price. So if you don't activate this line, you will enter a trade. You will think that they gave you the ash line as entry, but it is wrong. They didn't give you the ash line as entry if you are buying. If you are buying, they will always give you the red line I have activated here, which is the ask price, as your entry point. So once you buy Euro USD, this is the level at which you are going to buy. So before you can start making profit, unless the hash line here moves and then comes and cross above this line or your entry point here before you can be in profit. This is where it is critical. So pay attention again. Let me take it again. You have bought on this red line. This is your entry price if you are buying. So before you can be in profit, unless the bid line, which is the hash line here, comes up, the trade goes up and the hash line comes up to cross this red line level here, the entry price level, before you start making profit. So you realize that anytime you enter a trade, you will see that your floating trade is negative. The negative that you are seeing is the spread that has been charged. Because the difference between these two lines, the asking price, which is the red line, and the bidding price, which is the hash line here, the difference, you see that the lines are wide. The difference you are seeing here is the spread. So if you are buying, this is the point that you will be given to buy. So before you can start making profit, unless the bid line here moves up and cross above that entry, which is the red line here, when this hash line crosses above it, then you can start being in profit. So let's say that the hash line here is 1, okay? The hash line is 1. And then the red line here is maybe 3, okay? So you bought at level 3. That is what it means. So it means you bought at level 3. Meanwhile, the price is at level 1. So before you can start making profit, unless the price which is at level 1 moves and then comes above level 3, because you bought at level 3. So if the price doesn't move from level 1 and come to level 2 and then come to level 3, once it comes to level 3 exactly, you see that your floating balance, which is your floating trade, will be at 0.0000. But once it crosses above 3, going to 3.1, 3.2 going, you see that you are in profit. And once it gets to 4, it means you are in 1 pip profit. When it goes to 5, move up to 5, it means you are in 2 pips profit, because you bought at 3 and the price was at 1 and you bought at 3. So unless the price moves from 1 to 3 and from 3 above, you are in profit. But when it stays below the 3, you are in loss. So far as your trade stays below the 3, you are in loss. Do you understand? This is the red line is the 3, the hash line is the 1. So if you are buying, they will give it to you at level 3. So the price is also at level 1, but they'll give it to you at level 3. That's the level you will buy. So before you can start making profits, they know very well the price is here, but they are giving it to you to buy at the price level here at level 3. So before you can be in profit, unless the price, which is the hash line here at level 1, moves and then comes above level 3. Once it comes above level 3, it means you are in profit. So when the price comes to level 3 and then crosses and come to level 4, come to level 5, level 6, it means you are in profit. So when the price gets to level 6, assuming the price comes to level 6, how many pips profit will you be? It means you were given at level 3 here. So 4, 5, 6. So you will be making 3 pips profit. Although it is at 6 pips profit, but you are actually making a profit of what? 3 pips. The remaining 2 pips is going to the broker. Or sorry, 1, 2, 3. Okay, you are actually at 5 pips. Yes. Between 3 to 6 is 2 pips. 3 at level 3, you are not in profit. Level 4, you are in 1 pip. Level 5, you are in 2 pips. Level 6, you are in 3 pips. Okay, so it's 3 pips. Sorry. So it's 3 pips. So you are making 3 pips profit. Meanwhile, the price was at level 1 when you bought, and they gave it to you at level 3. So the price is at level 6 here, but you are actually making just 3 pips profit. The remaining, which is between the 3 and 1, is 2 pips. Level 1 to 2 is 1 pip. 2 to 3 is 2 pips. And at 3 is even. So they are taking the difference between the 1 and 3 here as their commission. So your trade will move 6 pips, all right, but you are only getting profit for maybe 3 pips. The remaining 3 is going to your broker as commission. So your broker is charging you the difference between these 2 lines as commission. And the commission will be charged whether you make profit or loss. It is automatic. Once you enter a buy, the commission is charged. Once you enter a sell, commission is charged. Now let's look at sell. If you are buying and they are giving it to you at level 3 here, which is the red line here, what if you are selling? If you are selling, it means that, listen carefully, if you are selling, it means that they are going to sell to you at this price here, which is the ash line. This is the price at which they will sell to you, the ash line. So before you can start making profit, if you are in a sale, unless the red line, which is up here, moves from the top and then crosses at below this level. When the red line, which is the ask price, comes below the ash line here, then you start making profit. Do you get it? Yes. You bought at this, sorry, you sold at this level, which is the ash line. But they will start calculating from here. It means if you are selling, it means this is where the price is. And then they gave it to you here. You understand? If you are selling, it means the price is at the top here, which is the red line. And you are buying at the ash line here. Sorry, selling at the ash line. That is if you are selling. If you are selling, the ash line here becomes your entry. Your E, your entry. So before you can start making profit, unless this red line moves and then come below the ash line, then you can be in profit. But if you are buying, it means the price is below here and they are giving you the red line as your entry point. If you are selling, it means the price is at the red line here and they are giving you the ash line here as your entry point. So before you can start making profit, unless the red line price moves and then comes below, once it comes below the ash line here, which is your entry point, you are in profit if you are selling. Is this clear? I pray you understand this. So your broker will always charge you commission, and this commission varies from currency pair to currency pair. For instance, let's take maybe GBP USD, another popular currency pair, GBP USD. This is GBP USD. I put the chart on 15 minutes because I want you to see, 5 minutes. Let me put it on 5 minutes. I want you to see the difference between, or the gap between the 2 lines. So the gap between this ash line and the red line is what is called a spread. That is the commission. So it means your broker is adding extra pips to the original price, so that the extra pips that they are adding to the original price will be their commission. And that extra pips that they are adding to the original price is taken automatically. Immediately you enter a trade, that commission is taken. You will see that commission floating at your balance level, at the floating balance. The floating balance level, you see that commission. So let's assume that the difference between the red line and the ash line here is about 20 pips. Okay, yes. Some brokers can charge you a spread up to about 20 pips. I'm telling you. Some brokers charge 15, 10 pips difference, 5 pips difference as a gap or the spread. Some brokers can charge you 20 pips as a spread. So if your broker is charging you 20 pips, immediately you enter, for instance, let's say GBP NZD. I'm just using it as an example. Or let's use GBP USD. Let's assume GBP USD, your broker is charging you 20 pips as spread. That is the interval between the red line and then the ash line, 20 pips. So it means immediately you enter GBP USD, you are in the loss of 20 pips. That is what it means. Before you can start making profit, unless your trade moves 21 pips, before you can start making a profit of 1 pip, because the spread is already 20 pips gap. And we already know that if the gap here is 20 pips, unless this ash line moves 20 pips and come to this level. So from 20, if it gets to 21, it means you are a profit of 1 pip, 22, 2 pips, 23, 3 pips in that order. So that is why immediately you enter a trade, you see that your trade is in negative. The negative that you are seeing your trade is the spread between these two lines, the red and ash line. That is the spread. So you always have to make sure you find out what is the spread between the currency that you are about to trade. I mean the spread between the ask price and the bid price. What is the gap? Is the gap just 2 pips, 5 pips, 10 pips, 15 pips, 20 pips? You need to know before you place your trade. Sometimes the spread can close down, can close or minimize. The gap can close. And then sometimes too, the gap can widen. So especially when it is getting to London session and then New York session. If you haven't watched that video, the part 20, I think 32 of my video talks about trading sessions. When it gets to the New York session and then the London session, and then the Australian session, especially when the market is closing for the day, immediately the market closes for the day, the gap will widen, the spread will widen. And then once the market opens, after 1 hour or 2 hours, the gap will begin to close. So maybe when the market closes for a new one to open, the gap can be between GBP USD, maybe, let's say 15 pips. I'm just using that as an example. I'm not saying that is how it is. Let's say 15 pips as a gap, which is the spread. So what it means is that maybe after 1 hour, you go and check the spread and you see that the spread is now maybe 8. Maybe after 2 hours, you come back and check and you see that the spread is just maybe 3. So if after 2 hours, the spread is now 3 pips, then I think from that point onwards will be a good time to enter a trade. If the spread is 15 pips, imagine entering a trade and immediately losing 15 pips to the broker. That will be so annoying. And assuming you are only looking for, in that trade, if you are looking for maybe 30 pips, if you are looking for 30 pips in that trade, already you are down by 15 pips. So it means indirectly, you are no more looking for 30 pips. You are looking for 45 pips because 15 pips is already charged as spread plus the 30 pips you are looking for. So 30, which is for you, and 15, which is for the broker, making 45. So your TP might be 30 pips, but I tell you honestly that your TP is not just 30 pips. It is 45 pips because 15 is going to the broker and 30 is coming to you. So in total, it is 45. But if after 1 hour, the spread is now 8 and you are looking for 30 pips, it means you are not looking for 30 pips, you are looking for 38 pips. Because your broker is charging you 8 and you are looking for 30, so in all making 38. If the spread is now just 3 after 2 hours and you are looking for 30 pips, it means you are not looking for 30 pips. You are looking for 33 pips. So whenever you want to calculate your TP, don't forget the spread. The spread is also very important because you need to consider it. Because if a broker is charging, I remember one broker someone showed to me was charging GBP NZD. Okay, GBP NZD. The broker was charging 30 pips as spread. And I was like, wow, what the hell? The broker, immediately the market opened, the broker was charging 30 pips as spread, which is the gap, 30. So assuming this guy is looking for just 20 pips in the market, it means in the end, what the broker is even looking for or is charging you is even more than what you yourself you are looking for. Because you are looking for just 20 pips. And immediately you enter that trade, your broker is charging you 30 pips as commission. So indirectly, you are not looking for 20 pips anymore. You are looking for 50 pips. Because 30 pips is going to your broker and 20 pips is coming to you. So indirectly, you are looking for 50 pips as TP. This is indirect. So it is very important to always check the ask price and then the bid price to know the difference. And so it is also very important that you activate the ask price, which is the ask line, so that you can know the gap between these two. Or you always make sure you check the two price codes to get the difference, or you check them from here to get the difference, so that you know at the back of your mind how many pips your broker is charging on that pair. And then that will help you to decide how many pips you should add as take profit. Because it will look a bit weird if your broker is charging you 10 pips as spread, and then you are looking for 10 pips from the market. It means that indirectly you are all making equal profit. Your broker is taking 10 from you. You're also taking 10. So indirectly, you are only looking for 20 pips. You are not looking for 10 pips, but you are looking for 20 pips indirectly. Now, I have already given you my 2 recommended brokers. If you watch the part 30 video and then the part 31 and 32, you will find a link to my 2 recommended brokers. That is if you are in Europe and in Africa. And I think those 2 brokers, you cannot use them in US. If you're in US, you can use those 2 brokers. But if you're not in US and you are in any other part of the world, you can use these 2 brokers that I have recommended. I'm actually an IB account holder with them. One, the minimum deposit is $10. And then the other one, the minimum deposit is $100. So broker 1 is charging you the minimum deposit you can deposit to start trading is $10. The broker 2, you need $100 before you can start trading. So you can choose or decide which of them you want, because their spread is good, especially broker 1, the one that gives you just $10 minimum. Broker 1 do not charge you swap. For them, they don't even charge swap. This excludes swap fee. I haven't even talked about swap. I am only talking about only spread here. But if you have a broker that will charge you swap and charge you spread again or commission, there are brokers that also charge commission, and those are ECM brokers. ECM brokers will charge you commission. Some of these ECM brokers are smart. There are some ECM brokers, they will charge you spread and charge you commission again. They will charge you 2 in 1. They will ECN, and I've written ECG, sorry. ECN. ECM brokers supposed to charge their commission on your trade, but not in spread. Okay, they don't charge their commission through spread, but they charge, you only see commission on your trade. When you enter a trade, you see commission on it. They also take it automatically. But there are some ECM brokers, they will charge you commission and then charge you spread again. So you need to be very careful. If you are choosing an ECM broker, you need to be very careful. Now, the broker 2 that I talked about, they are both ECN and also market makers. As for market makers, they charge their commission through spread. The deal index, or if I am to use the deal index brokers or the market makers, they charge their commission through spread. And then the no deal index brokers, they charge their commission directly without taking it from spread. The no deal index brokers are also called the ECM brokers. But like I was saying, there are also some ECM brokers, they will charge you commission and charge you spread again. So you need to be very careful so that at the end of the day, you don't end up working for the brokers. Because once they widen their spread, they make a lot of commission from you. When they tighten their spread, I mean, when they close the gap between these 2 lines, the ask and then the bid price, when they close the gap between them, it means they are charging you something little, maybe just 1 pip or 2 pip gap is what is added. So if it is just 1 pip or 2 pip, a spread is better. If it's 3 pips, it's better. But once the gap or the spread gets to 15, 5, 10, 20, then it's becoming too much. So choose a good broker, and then always know that market makers or deal index brokers, their commission is charged through spread. So if they are going to charge you through spread and the spread is going to be so wide, and then they are going to charge you swap again. Swap fee is when you allow your trade to run into the next day. That is when you allow your trade to run into the next day, they charge you swap. If you want to know the details of that, you may have to watch the part 1 and 2 or 3 of my videos. Just go to the playlist, Free Forex Training for Beginners, and you can watch the part 1, 2, and 3. You get to understand swap, how swap fee is charged. And also, if you want to see how ECM brokers charge their commission, you may also have to watch the part 1, 2, and 3 video, which is part of the playlist. So this is what it is about bid price, ask price, and then spread. If you have any question, go to the comment section of this video and leave your comment. Just ask your question. I'll make sure that in our next video, I will answer that question. I already have few questions that are on the channel. I'm working towards them. And in my next videos, I'll be answering some of those questions. So please, if you have a question bothering your mind about this topic or any other topic that I've talked about, please leave your question at the comment section and I'll read it and then get back to you with an answer in a video. So in our next videos, we'll be looking at some of the answers I have for some of the questions that you left on the channel. My name is Kofi. Once again, thank you for watching. Subscribe to this channel and I wish you the best. More videos coming. Let's grow this community because we have more videos coming and it will benefit you and others. I'll see you in my next video. Take care.